The way to make money in the stock market is to buy a stock. Then when it goes up, sell it. If it's not going up, don't buy it. Will Rogers, the American humorist, said that, and Will Rogers was right. That is practical advice, but how do you know if a stock is going to go up? That is by being able to read stock charts. That's what we do here every single day the market is open. You're listening to chartingwealth.com. This is our comprehensive review and forecast. We are all about stock charts and using them. Even if you're a value investor, my friends, don't you want to buy at the right price? Why buy something that is going down? In fact, we've been talking about that for months and years. In fact, gold recently has been on a big downtrend. We'll talk about gold when we get to it. Why would you have bought gold 4 weeks ago when it was rolling over, going down? Well, you know what? Hundreds of millions of dollars, billions of dollars worth of gold traded hands only for people to lose money. Why? Because they couldn't read a stock chart. Well, stick with us. You'll be able to do so. Let's jump into the markets. Everything up for the day on this Friday. The S&P 500 up 0.98%. So right at 1%. Big up day. Now, don't forget, we're still in a confirmed up move on the S&P 500 is represented by SPY. This latest week is actually an up week for the market. Derivative oscillator gained a little bit of momentum. Price percent oscillator heading up. This is on the weekly chart. So we can see that things are still moving up as far as the weekly chart goes. Here's the problem. What we've had happen over the last few days is a topping. Now you said, wait a minute, I thought you said the market was up for the day. Why don't we see a red candle? Well, this is a 2-day candle, and of course it represents down moves on the charts, and that is a down move for 2 days, Thursday and Friday of this week. And what we have had happen is we are in the process of a 2-day crossover. Now, if the market is up big on Monday, it will very easily pull this crossover back over into an up position. But for now, at the close of the market, the only thing we can do is look at what our charts are telling us. And what our charts are showing us on the price percent oscillator, derivative oscillators losing lots of momentum, we are crossing over, going down on this chart. That is happening. So we are marking that for you. Pay attention to that. Now, what will the markets do on Monday? Maybe they'll bolt up again. If they do, it could pull us back into the zone of a trade potential on the S&P 500, but we are not seeing that today, even with an up day. Look at the 4-hour chart. It really shows you what's happened. Market topped back on Wednesday afternoon, down Thursday afternoon and Friday on our Heikin-Ashi candlesticks, up during the day on Friday morning and afternoon. But look, it's not reached anywhere near the high that it hit back on Thursday. So things are trying to recover. The up movement for the course of the day was not even enough to have the 4-hour chart crossover going up. Now, there is a potential setting up on this chart for you to pay attention to. If it's a big up morning, if the markets start to soar again, you may have a crossover going up on the 4-hour chart at the same time you have a crossover going up on the 2-day chart. Pay attention to that. Look at your charts around noon. See what you see there. There may be a potential for a jumping in point if the market's going to go higher. What tells us it might be going higher? Our weekly chart. So we're not going to give up hope, but we're not going to be stupid either. We're going to watch. Remember, we are trend followers. That's why what we do works. We follow trends. We're not trying to make a nickel here, a nickel there on some kind of quant trade or beat the computers. We're following established trends. That's what we do. That's why we use the weekly chart, 2-day chart, and the 4-hour chart as our trigger chart. So keep your eye on things. You might have an opportunity at the beginning of the week. We now go to the NASDAQ 100 up the most for the day, 1.59%, blasting up. But check out the weekly candle. What do you see as you look at the candle? You see that the prior week's candle actually rose higher. Now we see our closing price in our Heiken Ashi candlestick is higher, but the wick on the top is not on this week compared to last week. Derivative oscillators gained a little momentum. That price percent oscillator not heading up at as strong an angle, but still heading up quite strongly. So there is momentum left to keep pushing this up. Same thing we have happening on the 2-day chart though. Crossing over, blue over red going down. So we might have a crossover going down underway. What do we do? Well, we're going to go ahead and call it because it has occurred. It's not strong, like I said. If it's a big up day on Monday, that could be enough to push things back over and pull things back up rather, and that may not occur. So we'll keep our eye on things. If it happens, it happens. If it doesn't, it doesn't. So we'll keep our eye on things and see what we see. Okay, my friends, that's where we are. Oops, I think I drew the line a little too far over. There we go. So we will continue to watch derivative oscillators losing momentum. Like we said, price percent oscillator rotating over. You can see the sideways slide. Market topped off back on Thursday the 25th. We've really had a sideways slide since then in the Qs. So again, could be simply gathering momentum to blast up even higher, or it could be over. And again, we don't have to know right now. We just have to pay attention. When we look at the 4-hour chart, what do we see going on there? Well, we see things moving up and again, getting up right about where things were prior to, at the top out, prior to a moving down, sideways and down, particularly that big down day on Thursday. So we'll keep our eye on things. Again, watch on Monday. If you see the 4-hour chart blast over going up, pulling that 2-day chart up at at noon after the 4-hour candle draws, you might have a jumping in point. So pay attention. And again, it won't hurt if you see that occur to do a practice trade on the Qs, and let's see how much more we can ride things up. The only saving grace of this whole thing is that weekly chart is still quite strong, and that may be enough to keep things going. Although remember, the trend is your friend until the end. This is what we train for. This is the reason we do this on a daily basis, so we can experience all of these activities. If you only tune in half the time or once a week, you're not going to get what we get day in and day out, and you're not going to get very good. Now, in a rising market, anybody can make money. You know, when the tide comes in, all the boats go up, no matter if they're a junk boat or an expensive yacht. They all rise in the harbor unless they have a hole in them. And so don't count yourself a genius. But if you want to be a genius, you want to be a charting master, have your own virtual printing press at some point in time, what you need to do is practice with us every day. All we ask, 10 to 15 minutes. Now, let's go from the Qs, from stocks to bonds. What do we see bonds doing? We thought there might be a weekly vertical crossover. Did not happen. I repeat, there is not a weekly vertical crossover. We didn't have it happen. We had an up week. Can you believe that? It really was an up week in the end. We have a green candle with a wick on top. Looks like a little wick on the bottom. Prices above the weekly trend line. Well, of course, it's because we ended it with this green candle. And we see the derivative oscillator still negative, but barely. And again, that price percent oscillator just won't cross over going down. We go to the 2-day chart. It's still negative, so of course we have no trade. Weekly's up, 2 days down. Remember, our large chart, the weekly, and our intermediate chart, the 2-day, have to be moving in the same direction. That's not happening. No trade. Let's drill a little deeper just for a little bit of reconnaissance. We see right now it looks like the blue line, that is the price percent oscillator, is trying to bounce off the red signal line. Derivative oscillator is negative. We just got to wait for bonds to sort themselves out. Price sort of dipped down and hit that weekly trend line and didn't want to cross it. So we'll wait and see what happens. We got to have that 2-day moving in the same direction as the weekly before we can do anything. Lastly, we go to gold. And how did gold end the week? Well, it ended up on Friday up 0.59%, but for the week, a down week. We have a red down candle, price movements below the weekly trend line. The derivative oscillators continuing to lose a little bit of downward momentum, has since The down peaked on the 18th, the week ending the 18th of April. Derivative oscillators heading down nicely. We go from the weekly to the 2-day. And of course, price is below the 2-day trend line. Had a red down candle ending the week, really showing a sideways slide. Market again on this latest 2-day candle touched a low of 119.54. So it keeps sort of hammering down on that 119.60, 119.50 something mark. We'll just say 119.60 is sort of where it's found its latest low. Price percent oscillator is still negative on the 2-day chart, but is getting closer and closer to that red signal line. The derivative oscillator is losing downward momentum. So what's gold doing? Just sort of hitting the floor and going to break through it, or is it going to bounce off of it? We'll have to continue to watch and see what we see over the next week. Remember, that largest chart still going down, but that 2-day has weakened significantly. That 4-hour chart at the end of the day crossed back over going up. Again, things hit their low on Thursday at 119.54 and then headed up Thursday afternoon and then up Friday and sort of leveled out there, just pushing above the 2-day trend line, still quite a bit below the weekly, but we did have that crossover on the 4-hour chart. So keep your eye on things on gold. We've been short on gold here since we had that weekly vertical crossover occur. That's what I was talking to you about at the beginning of the show. Why would you have bought gold if you knew how to read a chart when you saw a weekly vertical crossover occur at the week ending the 29th of March? We saw it, we called it, we shorted gold in our practice trade, and it's worked for us. Why wouldn't everybody do that? Because again, my friends, not everybody reads stock charts. It's not that hard to do. We train for it every single day. We want you to be with us. All you got to do to be with us is go to chartingwealth.com, sign up for our daily review. You get our daily review every day the market is open. And on Fridays, you get our weekly review and forecast, which is us going over what happened in the prior week and what you need to look for in the coming week. That's what we've been doing as you've been listening today. Also, if you want to help us out for all the work we provide to you for free, including all the great training at chartingwealth.com, we would appreciate it if you would consider buying our book, Charting Your Way to Wealth. You won't regret it. It encapsulates everything that we do here and explains all of the indicators that we use while we have our chart set up the way we do. Also talks about emotions, the kind of emotions you have to have. That is probably the biggest thing to conquer once you start getting a handle on how to read the charts. It's how to handle your emotions and how to do what needs to be done, when you need to cut your losses, when you need to capture your gains, the kind of stuff that really counts. We keep our method, KISS is our favorite acronym. Keep it simple and straightforward. Occam's razor tells us that the best solution is typically the simplest. You have too many inputs, you get paralysis analysis. Well, we don't get paralyzed here. We act, and we try to act intelligently. Einstein said, make things as simple as possible, but not simpler. When you make them too simple, they don't work. So we are right there at the beautiful point. Appreciate you being with us, my friends. If you're not a Patreon supporter, you can go there too. Sign up, all sorts of special stuff you get as Patreon members. If you're at that intermediate level, you actually get a 15-minute phone call from me once a month. We appreciate you guys. We know you appreciate us. You post so many great things about us. We hope we're helping you. And again, remember, game day is going to be the next market crash. Folks like Jim Rogers say it's coming within the next no more than 12, 24 months at the outside. People like him should know they've made billions in the market. We are paying attention. That is our game day for us. That is what we are training for. Because when that systemic crash occurs, we are not going to lose our backsides. We are going to be ready to actually make money like crazy. Now, while you train, these are all virtual trades, and we want you to practice with us. We're not a stock calling service. We're an education firm, but we are here to educate you for when the balloon goes up. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.